And everyone, and welcome to the Options Mentor. And once again, we have a wild ride with the SPX this past week with tariff concerns, other issues driving us all around. And what a day yesterday. That was completely crazy. A gigantic range. It ended up on the high or near the highs of the day. Pretty crazy. So next week, the week coming here, we have even more fun coming because we have a CPI on Wednesday, a PPI on Thursday, and Friday, by the way, at midnight, we could have a government shutdown if Congress can't come to an agreement on a spending bill or continuing resolution. So lots going on this week. The market won't like that at all if we get into Friday and there isn't some sort of a resolution or something to uh, keep the government going. So we're going to have to see how that works out. That could end up being a real market mover on us also. But let's take a quick look and a recap here back at this past week. And we can see this is just exactly what I'm talking about here with the SPX. Look at that thing yesterday. That's amazing to me. It actually opened at 57.26, went all the way down to 56.66, and then all the way back up to 57.70. So quite a crazy week, quite a crazy day. And the SPX there. Now, of course, the corresponding VIX index, which is, of course, the volatility of the SPX, is on a real jaunt upwards, right? We're near these recent highs back in December. We're closing in on those now. And I suspect that as we head in further into the week, if, for instance, Congress doesn't come to a resolution, that tension will go higher and higher. Now, you have to remember, if they do actually get an agreement, the market, I would imagine, would really rally off of that. So we kind of have to be careful in both directions this week. And oh, by the way, while we're here on the VIX, I think a reasonable thing to do in the VIX, if you think, hey, this is eventually going to work out over the next month or so, volatility will come down. One of the things I like to do if you want to do spec here is some sort of a VIX put debit vertical. I never sell verticals or into VIX because it's too volatile a lot of times, or you don't get paid that much for them. So what I like to do when I want to pick direction in the VIX is buy put verticals or puts, or buy call verticals if I think we're going higher in the VIX, or calls. So let's say you want to be kind of a contrarian. You think this VIX, because it does, as we can see here on the chart, spike up, go back down, that type of thing. Although it can stay up in the range for a while. So if you want to play for the downside in the VIX, meaning the market goes up, a lot of the tension comes out, you can do things like, well, buy a vertical out April 2nd expiration. You could even go out further if you want in time. Nothing wrong with that. Costs you about $2. And if you bought $2 or $200 in this case, you can participate pretty good in a downside move. Or you can actually outright buy puts. You could do that also. Now, the good part about that is you'll make more money if it really gets going down, right? You'll make more money than a vertical. However, you'll have a little bit more risk. So, and by the way, on the vertical, we can dial that in a little bit and make it closer, like buy 20, sell 17. So that's just a couple of spec ideas, if that's the kind of thing that you're interested in. And if you have that opinion that the VIX is going to come down, the market's going to stabilize over the next month or so. By the way, you could always buy call verticals if you think we're going higher in the VIX. So what does that leave us to do? Certainly, we're way up in the VIX. It's a little hard to say, hey, I want to get really long volatility. Volatility's already made a big run up. That's kind of like, hey, look at this stock today. It's set at 4 months highs. It's not necessarily the day you want to get in, right? You'd rather get in whenever it's lower. So I wanted to compare a couple things. First thing I did here was build a single fly out at March 28th. And what I had to do with this to approximate what I'm going to show you with a double fly is this is as close as I could get to it cost wise. So for $3,380, what you could do is you'd be centered at the money, 57.70, and then you would go up 140 and down 150. So we have an asymmetrical fly. I built this, I kept going up, up, up to get the right price. Now, here's the key to it. So whenever you build this fly, you pay almost $3,400. And you have a range of 56.54 to 58.86. So what is that? About a 230 point range between your break evens. And you're down $550 if you get to that upper one. On the lower end, you're up a little bit of money. But once again, 56.54 to 58.85, about a 230 point range for $3,380. Now, what if I wanted to do a double butterfly? And with this, I built two butterflies where you're going up 80, down 90 on each of them. Now, this trade would cost, of course, the $16.55 in debit on the call side. And the put side would be $465 debit plus this margin. And so that totals out to $3,110. So it's actually a little bit cheaper, right? It's about $200 cheaper, a little over $200 cheaper to put on this double fly. Now, what do I get out of that for range? Well, this one goes from 56.30 all the way to 59.19, 290 point range. So you get an extra, what is that, 60 points of range for a couple $100 less. That's why I like the double fly here. Now, what would be the advantage of the single fly over the double fly? Well, I guess the only advantage I could think of at all would be that you can put that fly on as one trade and take it off as one trade. So you could buy it as a fly and then set a closing order to sell it as a fly. Now, you can't do that with the double fly, right? That's too many legs. You can only do 4 legs at most brokerages. And this, of course, would be 6. So this one you have to put on as this upper fly and then put this fly on. I usually do those very quickly together. I'm not trying to, game the market or pick direction. If I was sitting right here, I'd go out, boom, hit this order, come back, boom, hit this order. That's what I do. I don't try to play games and think I'm going to catch the put whenever we're going up and catch the call fly when we're going down the same day. That's really asking too much, in my opinion, of the market, particularly the one we got now. So with this, you can only close it as a double, each individual, and you can only open it as each individual trade. So with this trade, let's say you put this on and you got $3,100 in it. Maybe you're looking for right around $300, a little more than $300 profit, somewhere around 8 to 10%. So what you have to do is you have to monitor your P&L. And when your P&L says you're up 300, actually, I'd pick a little more because you could have some slippage with this. But you just watch the P&L, and when you're up over 300 consistently, then what I would do is put in an order to sell this and an order to sell this at the mid price, because that's essentially what this is telling you. Hey, if you could get filled at the mid price on these two flies, you'd make whatever this P&L is here. So that's how I like to play it. You may have a little slippage. Maybe it's showing around 320, 330 profit. By the time you get it off, maybe you made a little less than it. Maybe you made 280 or something, but it'll be close. I would expect many times you'll have slippage because if you put an order in for both of these, a lot of times one will fill easier than the other, particularly if it's closer to one than the other. A lot of times it'll fill easier. And then you may end up having even to give in a little on the other one from the mid price. So expect a little slippage. So you may want to see that P&L a little above whatever your profit goal is for it. But I think this is a much better trade overall because of the width. And in this market, width is king, is it not? I mean, it was really nice yesterday to be able to have on a double fly, which I did, and just watch it go back and forth, and you don't have to do anything for most of that range. It's very, very comforting. Now, once in a while, you might have to do something, but if we had to do something to adjust this trade, it would give us even more range. And then, oh my goodness, you probably have well, you would have over 300 points of range in a trade. That's a lot. So I think maybe if you had to do something to add a little width to this, it would probably do you right there, meaning it would probably be enough to get you through the trade. So this kind of combo trade is really the only kind of fly involved thing I'm doing, whether it's two flies or a fly counter, fly diagonal, what have you, because of this stuff. In order to get anywhere near a comfortable range, you got to go crazy wide, and it gets very expensive. And here it is, more expensive than the double, and I still can't get the range. So that's why I've not been doing single flies in quite a while now, because the market just needs more range, particularly now, very tumultuous with these tariffs. And now we have this government shutdown, that possible, that always causes a lot of tension. So if you would like to know more about these combo trades, as I told you guys last week, my new course is out. It's really popular. People are really going after it to learn this, because you can learn all these different complexes that you can combine. The information for that is in the description of this video, along with all my other courses, along with my email if you have questions or want one-on-one mentoring. And also, if you want to be with me every day over at arimer.com, where I have a session every morning before the market opens, and then a couple sessions a week where we look at live trades and a help desk to help you with any trades you're having trouble with. So all that information, how to join me over there, is there in the description. And please hit the like and subscribe on this. Hit that notify button so you don't miss one of my videos. I do appreciate you guys being here, and I hope I get a lot of great feedback, people getting a lot out of this content. And one thing that comes up a lot is you want to know how to adjust or repair trades. If you want to do that, then you need to go over there and get with one of my programs at Arimer, or email me directly for one-on-one mentoring, and I'll be happy to show you that stuff and talk to you more about it. But for now, I wanted to acquaint you with this idea, something to give you a lot of range. And I'll be back here next week with you with another video. I can hardly wait to see what happens to us this week with the market movement. It is tradable, but you do need to be on your toes. And as I always say, to be successful in trading, you have to put up the right trade on in the right environment and know how to manage it. So that's what we're trying to do here. Put the best trade on for a particular environment, and then you need to know how to manage it, because in this environment, like I said, width is king. So I'll be back with you next week. We'll see how everything went. Have a good one, everyone. And please check out those links in my description. I think you'd really enjoy getting more education from me, whether through my courses and or being over at Arimer. So have a good one, folks. I'll talk to you next week. Bye-bye.